So, Chris, you had advocated going into this meeting for a 50 basis point rate hike, and yet you voted in favor of a 25 basis point rate hike. Could you explain your reasoning behind that?
Well, yeah, Steve. I mean, the data is basically screaming at us to go 50, but the geopolitical events were telling you to go forward with caution. So those two factors combined pushed me off of advocating for a 50 basis point hike at this meeting and supporting the 25 point hike that we enacted. So going forward, that'll be an issue whether to think about going 50 in the next couple of meetings or not. But the data is certainly seeming to suggest that we move in that direction.
What are you going to be looking for in terms of the impact of what's happening geopolitically to make that determination?
Yeah, we'll have to see. Other than oil prices, we'll have to see if it's starting to create further problems down the line. I mean, the U.S. economy directly is not that exposed to Russia and Ukraine except through food and commodity prices. But our trading partners such as Europe, they're going to feel things much more. I kind of think that this is probably going to knock off, a 0.5% off growth this year. But the U.S. economy is still going to be growing at a very, very healthy pace this year, even with this. So despite the stuff in Ukraine, we still have to keep our eye on the ball here in the U.S. and worry about getting our own house in order.
You said earlier 50 at the next couple meetings, and I guess I need to kind of parse that. Are you saying that the Fed ought to do a series of successive 50 basis point rate hikes?
Well, as I've said before, I really favor front-loading our rate hikes, that we need to do more withdrawal of accommodation now if we want to have an impact on inflation later this year and next year. So in that sense, the way to front-load it is to pull some rate hikes forward, which would imply 50 basis points at one or multiple meetings in the near future. I just think it's better to have a strategy of just do it on the rate hikes rather than just promise it.
Where would you like to see the Federal Reserve funds rate at the end of this year?
Well, I would like to see the Fed be much closer to what we think of as neutral by the end of the year or sooner. I think we need to get rates up to where they should by any kind of policy rule you can think of would tell you that we should be much higher than we are right now. So I think we can do that with some aggressive rate hikes earlier in the year, and then we can pull back a little bit towards the second half of the year to see how things are going. And then if we need to continue, we'll just keep going. So that's my view, is to try to get the rates closer to neutral.
Chris, we have a chart up that it just went down that showed that the year-end forecast, at least in the Fed funds rate, is 184 for this year. When you say neutral, do you mean 2.5%? Is that where you'd like to be by the year end? I'm sorry, but I'd love to put a number on that.
Yeah, well, my own personal is somewhere between 2 and 2.25, so maybe a little less than the median on the SEP. So that's kind of where I'm at, and my own projection is to try to be above that by the end of the year.